it going? It's Drew Blazik here with Logos and Markets. And in this video, we're going to do the income tax schedule and we'll see how it affects other schedules and financial statements and how we have to plug it in. So let's get started. And again, on Logos and Markets website, you can get the Excel file that's driven by SIM. So you can practice the income tax just by itself and see how it plugs in, and you get a really good idea of how it affects the entire three statement model. So let's get straight into it. First thing I like to look at, let's look at the weighted grade and the overall grade. So we can see that it does affect the income statement directly, and it affects other numbers even more. And then you got the cash flow statement. It affects operations directly. However, if you mess up the income tax schedule, it's going to affect things indirectly, other than investing. The balance sheet, it only directly impacts fixed assets here. And then we have the balance sheet here. It does affect other aspects of it. And then we got the income tax, which is 0. So always refer back to the grade. It's a great way of looking at how does it directly affect. And again, the weighted grade means, did you do it correct? Even though the numbers may be incorrect, the overall grade is, are the numbers 100% correct? Okay, so let's get the income tax. A couple things what we want to do here is I want to find out what the tax rate is. I'm going to go to the assumptions where we'll have the tax rate, and that's going to be a 35%. Next, what I want to do, we have to plug some numbers in. I only have the projected years here. So what we're going to do is we're going to go up to the income statement and grab the earnings before taxes. That makes sense, right? We want to find out on the income statement how much money do we have. And I'm going to go straight up to the income statement. Again, we want EBT. So I'm going to go to EBT right here. That's after the interest is subtracted out. I'm going to plug that in, and then I'm going to have this go across. And just to reference again, so that 45.7 is green, which means it is correct. These numbers are not the correct numbers yet, but we can go back to the grade and look at the income tax. We go right back to the grade and look at our income tax schedule. And as you can see, we have 3% of the numbers correct. That's that first number. However, we did it 17% correct. We did it the right way. We did the right equation, even though those numbers may not be correct. Next, we want to know, the government lets us do this, we could subtract out reduction in EBT for timing differences of when we receive money. Each country will have different laws, tax laws when it comes to this. So it's important to see what country this is. So what we're going to do is we're going to equals, and then what we're going to do is we're going to go to our assumptions page and look at a reduction in EBT because of timing differences. We're going to say it's 5 million. And then the next line is we want to know what's the government. The government is going to say you have to pay this amount today. You have to be taxed on this amount because they let us, because of timing differences, not have to be taxed on that 5 million. So what the government EBT is, all it is the original EBT minus the timing differences of 5 million. So I'm going to bring that across. So right away, we have two numbers. We have the EBT on the income statement, and then we have the government EBT, what we must pay taxes today. This is important because this is what we're going to show on the income statement. That's what we're showing, how much we got taxed. However, we only have to pay the tax rate times this year. That means that 5 million times the 35% gets to be deferred out at a later period. So, okay, next what we want to do is what is our accounting taxes? That's our taxes on the income statement, the total amount of taxes that it shows we're paying, even though we're not paying all that taxes today. Well, that's going to be our original accounting EBT found on the income statement. And what I'm going to do is I'm going to multiply that times the tax rate of 35%. I'm going to hit function F4. I want to make sure it's an absolute value when I drag it. So that number is our accounting taxes that it shows That's what it costs us this year, even though we're not directly paying it today. That's real important because that affects the cash flow statement. Even though it looks like we're paying taxes today, we're deferring it out to a later period. Next, what we want to do is what is our current tax rate, which means how much taxes are we paying today? Well, that's going to be the government EBT, how much they say we have to pay taxes today. And what we're going to do is we're going to multiply that times that tax rate of 35%. So this amount here is what we have to pay on taxes. This is what shows on the income statement. This is what we have to pay today, which means the increase or decrease in deferred taxes will be the difference between what we show how much taxes we're paying and what we actually have to pay. So all I'm going to do right here in the deferred part, and this is going to be correct number all the time, is I'm going to take that number minus this number, right, 1.8. Or what you could say, or what we could have done was I could take that 5 million and multiply it times the 35%. That's going to be the same number. The reason is that 5 million gets to be deferred out. So that's 35% of the 5 million. And the total income taxes, same as the accounting tax above. That means the total taxes, it'll be the same as this right here. That's all it means. And all I'm doing here to make sure we did it correct is going to sum it up. And then that shows the same amount as what we're paying. Let's go back to the grade. Let's look at it. We are 100% completed on the income tax, which means we did do it correctly, even though the numbers aren't correct yet. But 43% of the numbers are correct. So let's plug it in. And that's the importance to make sure we plug it in correctly. The balance sheet is not balanced either. The first thing we're going to do, so let's just scroll up real quick. So we have to plug in a balance, an ending balance on the balance sheet. It's going to affect the cash flow statement. I'll explain why. And then it's going to affect the income statement. So it's going to affect the financial statements, the balance sheet, the income statement, cash flow statement. Okay, let's plug in the balance sheet first. What we have is it's a balance of some sort. If you've done my other videos, a lot of our schedules will have an ending balance of let's say, common share. And all we do is we connect it, we input that ending balance to the balance sheet. We don't have that. We didn't do a total balance on ours. So what we're going to do here is we're going to say, remember that's an increase or decrease in deferred taxes. So to find out the balance of deferred taxes, we're going to take the amount that we previously had, and then we're going to add in the change, the addition or the decrease. The addition or the decrease in deferred taxes, that's going to be our ending balance. So I'm going to add that 1.8. So all this should light up green. Again, we don't have all the numbers correct yet. So if I go back to the grade, the balance sheet is 100% done correctly. However, 81% of the numbers are correct so far. Our totals are off, our equity's off, and our current assets are off. So let's go up a little bit. Now we got the cash flow statement. So let me spend a little time here to explain this. The cash flow statement shows us our cash, how much cash we have, our position in cash. We have three different activities. We got operating, we got investing, and we got financing. The operations is how the company is ran. So look what we have here. We have net income, which isn't correct yet. And then, however, the net income shows a lot of different things that aren't directly paid with cash or there's not direct cost or outlay of money. So what we had to do, this isn't a completed number. So what we have to do is we had to add back in depreciation. The reason we had to add it back in because we used it as a cost, but it was never a direct outlay of money, and that depreciation was for tax purposes. So we add it back in. Next, what we have to do is we have to add back in deferred taxes. The reason is when I go up to income taxes, we're subtracting out deferred income taxes on the income statement Because on the income statement, it's shown this is the total taxes we had to pay with our income, even though the deferred income taxes is deferred out at a later period. Therefore, to show how much cash we really have, we have to add in that change of deferred taxes. Remember that the balance sheet is a balance, the cash flow statement is a change of cash. So I'm going to go to that 1.8 and just select it. So it's going to be an additional 1.8 each year of cash, because that's the net income. We're going to add back in the depreciation, add back in the deferred taxes, and then it's the changes in working capital. Watch that video if you want to get a good understanding on that as well. Okay, so let's go back to our grade just to make sure we did it correct. Cash flow statement, the numbers are 70% correct. However, we did it correctly. We did the right functions, the equations, and we inputted the correct numbers in. So we're done with the cash flow statement. All we have left is the income statement. I'm gonna go to the financial model, and all we have to do is plug in our current taxes, our deferred taxes, and our total. So that's gonna be a quick little input. I'm gonna go to the current taxes, and if you remember how we did the income tax schedule, I have current on top, deferred on bottom, so that makes it pretty easy. I could highlight that, hit Control R, then D, and that would automatically highlight it. It doesn't look like it's correct yet, right? I'm gonna go back to grade, look at what we're doing on the income statement. We're 95% complete, 78% of the numbers are correct. Is because we have to sum that total income taxes up, because the net income subtracted, the net income subtracted from EBT minus that number. So once we sum this up, you'll notice everything should turn green. I'm going to scroll down to make sure the cash flow statement, this is green now, so that it's got the correct number. And then go down to the balance sheet, that's correct. Our income statement, our income tax statement is correct. Go back to the grade, and we are balanced, and we have 100% correct numbers. Thank you for watching. Again, go to Logos and Market if you want this Excel sheet, if you want to get good at income tax. Practice till you get good. Just a friendly reminder, if you go to the top of the Excel sheet, hit reset worksheet. I do lock my Excel sheets. You'll have a little button that pops up. Just hit cancel or the X and it'll still reset it. So once you hit the reset button, I'm just going to show you what it looks like. It's going through all the unprotected cells, so it deletes that. It deletes this one here, and you get to practice your income tax skills again. And I just want to leave you with this. The goal of these sim Excel sheets is not just to practice the equation, it's to sit back and can you logically think about the income tax schedule? What does it affect? What's the application of it? It affects the income statement. It affects the balance sheet, right? With the deferred, there's a balance of deferred taxes, and then also operations on the cash flow statement. That's the goal. Can you communicate those three aspects of taxes with your boss or with your professor? Thank you for listening, and God bless.